Welcome back to the Day Trading Blueprint. So, today we are going to be talking about how to find support and resistance and how to mark it out. It's pretty simple. It shouldn't take long to go over and explain it all so that you guys can understand it and know how to mark it out. Now, support and resistance is good to it's just kind of good to know how to mark it out. It's not necessary, like, you don't need to know how to mark out support and resistance to be a profitable trader, but it is, however, good knowledge to have. So, without further ado, let's jump right into it. Alright, and so first things first, I want you guys to know, when do we want to place support and resistance lines? So, with that being said, we're going to go up here. Alright, so when you want to mark it is whenever you see consolidation. And so that's simply something like this right here, right? Where the market is just moving completely sideways, right? And so how you would mark this movement out right here, be this right here, and this down here. We're going to use red to signify it being on the downside, as we use green to signify the other one being on the upside. And here's your other one. And how you know that your lines are in the correct spot is because in this sideways movement, you will see it bouncing off each of them. And then how you would play this is you would play a strong break or a strong break and retest off of it. And let's mark out some support and resistance levels. So, one, we can see sideways movement right in here. So you can see kind of just moving sideways right there. And so we are going to mark that out. Let's go ahead and zoom in here so we can see it a little bit better. You can see just moving sideways. So we're going to grab our line here. We're going to place it at the top of the resistance here. There we are, and as you can see, 1 touch, 2 touch, 3 touch. And this one did pass through, but it did not confirm. It fell right back in, as you can tell, because it's that resistance line right there. And then if we come over here and mark this one out as well. So that leaves us right here. We have these touches right here. Almost a touch right there, not quite. Came back up, touch there, back down and deflected off this line again. And then as you see, we come up, failed to go out strong, failed to go out strong, and then we had that breakthrough here. So when playing it, if I were to play this position, my position would look like this right here. I would play that strong breakout, and I'd have cashed out somewhere in this sideways movement, and it would have gave you a tiny position that looks something like this, right? Quick, easy position, get you some money, and of course you go over here, you can find your targeted zones. As you can see, we swept that liquidity zone. So you could have had a position that looked like this once you found your target, and get a nice 1 to 3 RR. Alright? And then as you can see, right here as well, we have a little bit of support and resistance. Not as well. I like marking out support and resistance whenever it's got more of a range. That's when I consider support and resistance lines, whenever we actually have a decent range going and it's just bouncing off the tops and bottoms of the same areas. Because yes, we could place it here, and then we'd have our other one up here. But as you see though, we're not really bouncing side to side, we're just kind of moving sideways. Right, we're just kind of moving sideways Whereas over here, if I were to do the same thing, draw a line in the middle, we are actually leaving that line and ranging out a little bit to create that support and resistance. Whereas right here, we're just kind of moving in a directly straight line. So I would not use support and resistance to mark this out. But this right here, where it does range and everything, is support and resistance. I'll go ahead and change the colors here for these, as you guys can see them a little bit better. And I'll make that one there. And so as you see, a breakthrough up here to the top side would give you a strong buy position, and down here would have gave you a sell position. Right, and you can just use easy things to target, like simple liquidity pools. And if you don't know how to mark those out, it's okay. Just go ahead and go on to our next video. It should be added in the top right corner of the start of this one, and then you'll be able to find out how to mark out liquidity pools, and not just liquidity pools, but the stronger liquidity pools, because not all liquidity is strong. Yes, it's still there, but some stronger than others, and I'll get more in depth into that in the next video. But I wanted to just jump in here and show you guys how to do that. So, now with that being said, let's go ahead and jump to another example. Alright, so in this next example, we hopped over to NASDAQ because gold does not really give that many good support and resistance lines. It just doesn't like ranging for support and resistance. In other words, in NQ and other things, NQ stands for NASDAQ if you're new here, and NASDAQ really gives a pretty good one most of the time here. So as you can see, we open it right up and we instantly already have two examples right in front of us that I'm going to show you guys right now. So let's get into that. And as you can see here, I'm going to start here, go up, back down, up, back down, up, down, up, down. So, and once you can identify that with your eyes, then you are able to come over here, grab your little line tool, place you a line up here, and because it's the top side, we're going to make this line green. As you see, one touch, fail to pass above, one touch, two touch, three touch, fail to confirm above again. Alright, and placing this downside example down here, you could go over here, do this right here, and we'll make that one red. And as you can see, one, fail to break through, two, touch, fail to break through, touch, touch, fail to break through, broke through, instant upwards. And as you can see here, we're starting to get more intense in this support and resistance lines, signaling we are breaking out soon. So if you're in this sideways movement and you get a nice range going, that range gets massively disrupted. Expect it to move either way, either break up to the upside or break down to the downside. And as you can see here, after that started to happen, we bounced, failed to break through topside, and flushed out the bottom, sweeping this downside liquidity right here, right? And then we had to pull back up, and then we came back down to finish sweeping that downside liquidity. Okay, and there's one example right here, and then if we scroll right over here, we have another example. If you can see it here, go down, up, down, up, down, up, down, minor up, back down, and we just kind of move sideways from there, right? But sideways to a down point after we had broke out. So let's go ahead and mark this out here. As you see, we can mark it out like this right here. And because that's the top, we can add that in green there. Move it to the top of this wick here. And we can add the bottom one in right down here. Alright, and yes, I know you may say there's not as many touches, but I'm about to go over why this works as support and resistance. So as you can see, we are moving sideways here, and like I said, right here, it's not really support and resistance because we aren't creating that range for the support and resistance. But as this comes by right here, after this point, we start to add range to the support and resistance inside the same zones that it created right here. So that does make it support and resistance. You see, we have a support line here that we keep bouncing off of, resistance line here that we keep projecting down off of. Okay, and as you can see, we're bouncing around here, and up here, we failed to break above strongly. Every time we go up, we keep going down. We got a bunch of reds, fail to go up, red again. So this ultimately right here says that it's not a strong breakthrough, so you do not get a buy position here. And if you did, you could sweep upside liquidity, but there was no position to the upside provided there. Meanwhile, we worked our way down, broke out to the downside, and right here it gives you a strong sell side confirmation. So you could have entered in right here, and it would have been a bit of a sloppy position here, but it would have still paid you out. Let's go ahead and do this here, enter in on the strong breakout here, top of there, and bring it down to sweep that liquidity from over here. And if we scroll over here, we'll see after a bit of sloppy messiness, it does hit TP. Now, granted, it played around a lot before going there. It still went, and if you entered here, you could have exited whenever it went in here, or you could have held it to full TP. It would have taken a while because apparently on the 9th of January, NASDAQ didn't have a lot of movements. As you can see here, we were just moving sideways a lot of the day. But we also, this position paid out, never stopped us out, rejected that buy position, and provided us with that sell side through the bottom of that resistance line. Or my bad, through the bottom of the support line, as you can see here. Never stopped us out, got close one time, and then kind of after some time hit TP. And so that's how you mark out support and resistance lines. Like I said, pretty simple. You're just looking for this movement right here. Right? That's all that you're looking for. And that's what you would mark out with the highs and lows. And then you would play a strong, firm break, and you could target liquidity zones. Right? And that'd be your support and resistance and what you could target. And, well, with that being said, I hope you guys have an amazing day. And if you want more help on identifying and learning what liquidity pools are and how to identify strong ones to target with your TPs, just go ahead and click the video that'll pop up on your screen right now.